We're almost 3 hours into trading. It is Monday, October 4th. Hello, traders. Last night I did a video. I highlighted a stock I liked, APRN. Futures were indicated about 16 points higher. We're going to get into that. You can see the nice bullish candles in here. Long candles closing on their high. Fantastic relative strength. Excellent volume. Those are all key criteria for us. That's what told me that this stock wanted to move higher above all the major moving averages, trying to get through horizontal resistance, put up the 5-minute chart. Oh, look there, Pete. It's a loser. It's down on the day. That wasn't a very good pick. Hey, wait a minute. The market is down huge right now. Even if you would have bought on the open, you would have bought right here at the high of that red bar, and we're right back to square one. When the S&P 500 is down 65 points and you buy a stock on the open and you're at break even, you're doing well. That tells you that relative strength works. That's the system that I teach. That's the edge that you have. Should you have come in and bought the open? Heck no. Let's go into the 5-minute chart of the S&P 500. I'd mentioned to you I was looking for a gap higher, but in the video, the primary theme was I don't know what is going to happen in the market right now. I don't. We're at a critical juncture where we could swing either way, and I've outlined the reasons for that. So let's take a look at the market. I'll show you the types of candles that I told you to be very leery of. In particular, if we had gotten the gap up, and the futures were up 15 points at the time of the recording. They'd only been open for about a half an hour or so, but it looked like we were going to get a nice strong opening. Here's the pattern that I was looking for. So we've had dips that have been bought instantly, and as soon as we had a long green candle off of the support level, then the next candle is a gap and go higher. Well, we had that forming possibly overnight, but I said, hey, there's a lot that can change overnight. We don't know what's going to happen before the open, so be very, very careful. This is the 100-day moving average. There's Friday's price action. Green candle closed above the 100-day moving average. Today was looking, at least from last night's price action, that the top of this wick was going to be the open, and there was a good chance for a gap and go formation. Everybody, myself included, asset managers, retail, everyone has been looking to buy the dip because that's worked very successfully for years now. Most of the dips have been so short-lived that you had to be aggressive and you had to buy them right away. And you get this nice green candle and then a gap and go. Nice green candle off of support, gap and go. So that was possible this morning, but what we had to watch out for is a possible gap reversal. I had mentioned to you long red candles closing on their low, like this string right in here, is no good. Even right out of the open, instead of having a gap higher, we had a gap lower. That was problematic. So let's get into the daily chart a little bit and talk about why this is a longer term problem and why it appears that we have lower lows coming in the future. So we get this test of the 100-day moving average. Of course, we were going to expect a bounce off of that because every other bounce off of the moving average has resulted in a rally. But because this selling pressure was heavier, it told me we were likely to see a bear flag formation with that upward sloping trend line violated. Blam! There we go last week. Long red candle closing on its low right at the 100-day moving average. We preserve almost all of those losses. These are warning signs, and then another long red candle through. So these were a problem. We had some nice price action on Friday, but the lack of follow through this morning, the fact that we didn't have that gap up, we didn't have that gap hold, we didn't have an advance on that gap, so there's no gap and go, tells me that buyers are back on their heels. They don't believe that this support is real. They're going to continue to wait. They put their wallets back in their pocket. They feel that now you've got some really sustained selling pressure. We're going to see a lower price in the next week or so. Now, what I will be looking for is a nice, big, deep sell-off like this red candle that we saw from last week, Thursday, where you have an air pocket, buyers are nowhere to be found, and it looks like stocks are never going to have an uptick again. Then all of a sudden, about 2 hours into the open, you see these long green candles stacked, and the market never looks back. And it yields a nice long green candle, bullish hammer, if you will. And let me go back to that daily chart like this. That's what you want to be watching for. So everything looks horrible during the course of the day, below major support, and then out of nowhere, you get buy, close on the high. Then you're going to get a relief rally for at least a few days. That type of support, long-term asset managers will get behind. As a trader, I certainly will get behind it. We haven't seen anything like that, and we may not see anything like that until we get closer to that 200-day moving average now. This downward sloping trend line is intact. Let's shift gears a little bit. Let's talk about the price action that I see unfolding this morning and some of the commentary that I had made to traders in the chat room. So these are long red candles closing on their low. I was not short in here. Had a nice little bounce, long red candle. We're bouncing again. So this tells me that these candles are not stacked one on top of the other with little to no overlap. This is kind of a probe for support. And we don't know until really these candles, these two candles here told me that, uh-oh, this is some pretty heavy selling pressure. I've got 1, 2, 3, 4 decent sized long red candles, but we're already so far down here. I hate shorting the low of the day, which this was the low of the day, but I did. I took a small position, a quarter of a position, and down in here, I had this long green candle in here. I took a 1 point profit on the trade. I said, we're getting too low and we're close to the support from Friday. I'm just going to sit back. So we get this little bounce in here. Well, we've had one long green candle here, suggest support, one long green candle here. We had a couple of other green candles in here. So these are all signs that support is starting to form around Friday's low. And so now we get a long red candle. Here's a red candle that goes through the low of the day. Right here, I told members you do not want to be shorting here. I have shorted here in the past many years ago, and I've learned that what you have to wait for is, okay, now we made the low of the day right in here. That's going to attract some shorts, and it's also going to trigger sell stops. So we get this red candle definitively through that low of the day from Friday. Now what we would need to see is a tiny little red candle, a doji, that preserves all of those losses, and the next candle has to be a long red candle closing on its low. On that red candle, then I would be shorting because it legitimizes this breakdown. Otherwise, what happens is you triggered the sell stops, it flushes those traders out, and then you get this bullish engulfing candle. This was just to trigger sell stops, and boop, it reverses immediately. That told me that we were going to see a rally off of this low. Does that mean that I'm out there buying calls with both hands? No, absolutely not. This is a bearish trend day that's setting up. The fact that the market didn't have a gap and go is very problematic, and it tells me longer term the market still has some selling pressure. What I'm looking for is let this bullish 10P cross run its course. It was telling us in here, need to be careful, bounce coming, bounce coming. Let this 10P indicator run. When we get our bearish cross, then we'll be drawing our upward sloping trend line, waiting for the market to roll over, get the bearish cross. Now, from this higher level, if that selling pressure is as high as I suspect, you've got a running start. Bam, bam, bam at that low of the day, and you can break right through it. Why would the selling pressure start to increase off of a bounce like this? Because you have dip buyers in here trying to load up, bullish speculators figuring that we're going to get a really nice big rally off of this low. And When the market reaches its peak, they start taking profits. And in some cases, when it rolls over quickly, they start getting shaken out of that position. And that fuels the next leg lower. So I would like to see this run its course in about the next 10 or 15 minutes. I don't like bounces that last an hour, hour and a half. That tells me there's very strong support there. When the bounces are very brief and fairly shallow, then you know that the selling pressure is still strong and that the next leg lower could be substantial. Folks, you need to be careful in here. Every day I keep telling you, I don't know which way the market's going to go. I don't know which way the market's going to go. Today, I see the price action. I have some clarity. I feel the market is going to go lower. And you have to be patient. You have to wait for these signs. I feel that it's going to go lower over the course of the next few days. I don't think we've seen the lows. So I'm going to be trading accordingly. I'm going to be looking for positions to short, and I'll let this 1OP bullish cross happen, have that upward sloping trend line. I don't have much of one right now because it's very, very steep. So what I'll be looking for is horizontal support areas that I want to have violated, like this opening price from right there would be one support level. If the market continues to go higher, I'll probably drop one right here at the close of that long red bar, just to give me an alert to know when I should be considering a shorting position. If it just starts to kind of bounce and it starts to take a lot longer time frame, then I'll have a shallower upward sloping trend line that I can use. I don't like super steep trend lines because they're easily violated. I tend to prefer ones that are at a 45-degree angle or less. So that's how I see things shaping up. We got this nice green candle here, nice green candle here. Okay, here we go. Not so fast. There's your bearish engulfing candle. So we're chopping around here. I think that we're going to eventually hit resistance, and then you're going to see another leg lower. Today could be a fairly nasty day, and I've given you all the reasons why. That is some heavy duty selling pressure. Click GTC, click the candle there, click the candle there, downward sloping trend line. Until this trend line is breached to the upside, I am going to continue to be bearish. With every passing day, it will come closer and closer to the 100-day moving average, and then ultimately that might give me 2 points of resistance so that when we do get the upside breakout, I will have known that it can get through that downward sloping trend line and a major moving average, like the 100-day moving average. But if you look at this time-wise, for this to come down, you're talking about probably a few days, maybe even a week for that to happen. So look for lower lows in here. Let's go back to APRN. If you had paid attention and you saw the market selling off and you started to see some relative strength in APRN and you felt the market was bouncing, you could have gotten long in here and made a little bit of money on it. But in general, when you've got a bear trend setting up, you don't want to get overly cute and try and play bounces. Your best bet is to wait for the bounce and to watch the bounce. But during this bounce, you're going to have stocks that are still relatively weak to the market. So you're on the sidelines, you're expecting that next move lower. Now you're looking for stocks that are weak, that have a chance to move lower. That's what I'm going to do. I'm going to go into my day trading searches, heavy selling. I'm going to go into relative weak 30. So let's take a look at what some of the weakest stocks are. That is some nasty action. So what's the market done over the course of the last half an hour? Rally, 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 rally. What's this stock done? Down, down, down. This stock wants to move lower. What's that daily chart look like? I don't know. Now I do. Has support at that 100-day moving average. Likely to test it, if not today, probably in the next day or so. Pretty heavy selling volume there. You can see that it's broken horizontal support right there. So yeah, that looks like a pretty good short to me. SAVA resting on that 200-day moving average. Going to be tough for that stock to move lower, but if it can break below the 200-day moving average, upward sloping trend line, breach to the downside, 200-day moving average fails, big volume. Yeah, that one has a chance to move lower as well. I'm looking for that trade of the day that I'm going to set you up with so that when the market rolls over later today, you'll have something to consider. ZM, you can see it's gradually drifting lower, but I can't say that it's doing that with any kind of gusto in here. You still have the low of the day. Pardon me, that symbol ZIM. I'm going to continue to look. Still not seeing, that's pretty good. Nice, steady, selling pressure. Go to the daily chart. Too choppy. I don't have a clear, defined breakdown. AUPH has been a bullish stock that I've been in. It's starting to roll over. It's lost that upward sloping trend line. It's lost that breakout right here. It's below the halfway point of this long red candle. Yeah, this looks like it probably has some pretty decent downward momentum. And you can see very, very steady selling action. I think it's got to, well, it's through this support level right here. Actually, not quite yet, but that would be one support level. This would where you can start to take a short position, but this would be the primary one. You want to see it take out the low of the day from Friday. It's not there yet. We've got better stocks that we can find than that. Continuing to look. I'm just searching. I want to find something really good. Facebook. Facebook's going to be my short of the day. Facebook was a short back in here that I had mentioned where it couldn't get back above that 100-day. Look at these gaps lower. This stock is weak. It's got a clean path to that 100-day moving average. I like that one. Let's look at the 5-minute chart. Facebook can be pretty choppy though during the course of the day. So always better to try and short on bounces. You can see everything looks great for a short, and then all of a sudden it rallies out of nowhere. But yeah, Facebook looks like it's got some serious selling pressure in here. If it continues to maintain its relative weakness, this is a good short. Put up the 10 SI indicator, orange line below zero. Will give you your clue there. Not sure why it's flatlining in here, but in any event, it has relative weakness on a daily basis also. So let me put up the daily chart, and there you can see how it's continuing to be very weak relative to the market. You may try and sell an out of the money bearish call spread, keying off of that 337.50 level. I think that's a good looking trade. That should work. Earnings on Facebook November 4th, so make sure that the options expire before November 4th. I think that's going to be my bearish pick of the day is Facebook. Let's recap one more time. Market, if it were going to rally off of the double test of the 100-day moving average, we would have seen a gap higher and a go formation today, building on that green candle from Friday and that close above the 100-day moving average. We open higher and we never look back. That would have been fairly bullish, but not overly so until we get through that downward sloping trend line. Set us up for some good bullish day trades? Yes, perhaps. Overnight swings? Nope, not till we get through that. But it didn't happen. In fact, we saw exactly the opposite. Nice encouraging signs on Friday that, yeah, maybe we got a double bottom low that we're looking for. Everybody anxious for a year-end rally, trying to buy, trying to get in at the best possible price. Follow through today. Didn't happen. That tells me we're going to be heading lower. And you can see how sustained the selling is relative to the other dips. Now we are 1, 2, 3, 4 weeks into this market decline, and it's October. So we've got more downside. Be very, very patient with your bullish swing trades. We need to see that capitulation low where we have a gigantic bullish hammer where the market free falls, we rally and we reverse hard as can be. We never look back. We close near the high of that candle. That's what asset managers are going to be looking for. And on a day like that, you're not going to have wimpy little bars like this where you get a green bar, red bar, green bar. When we hit that low, it is going to be gigantic long green candle, gigantic long green candle, gigantic long green candle closing on their high. That's when we'll know all the losses from that day will be erased. That's what I call a capitulation low. It comes on heavy volume. We're nowhere near that pattern right now. I could go into the fundamental reasons why the market is selling off, what some of the dark clouds on the horizon are, but I'm not going to do that because in the description of this video below, there's a link to my Twitter feed. You can click that and read my pre-open market comments every day. Good luck with your trading. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.